Good morning, everyone. Thanks for joining us today. We're going to take a look at our live trading room here together at this moment, this place. Once again, welcome. First of all, we're going to take a look at this disclaimer explaining the fact that the online material here is for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Alrighty, as always, of course, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more info on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here and the content as well. So, as always, thank you for your attention on this important topic. We are back with the Fibonacci and wave trading topic of today. Yesterday, of course, we were looking at the Forex strategy part of things, and well, it was a bit of a quiet day until we had the FOMC statement yesterday that certainly put a spin on the market. So obviously, that's going to be an important topic to look at today. As always, we have this checklist basically that I use to have an idea of whether I'm just chasing the market or I'm actually looking at something that meets my trading plan. And these bullet points can be used for any trading plan in that regard. And it depends what kind of configuration you're looking for, whether the market is matching indeed what you're looking for. You can use these things like trend, opportunity, filters, the trigger, or the entry method. And today, one of the key focuses will be the Fib tool and the wave analysis. Take a look at Admiral Markets and social media. And with that said, let me head over here to take a look at the calendar. Now, yesterday, as I said, we already were talking about it, the fact that we have a very big news event. That was yesterday. We'll take a look what happened with price. In the meantime, New Zealand GDP was 1.0, was a bit disappointing. We have pound retail sales in 1 hour 42, so the pound is a bit of off limits, isn't it, until we have that behind us. Otherwise, it seems to be relatively quiet, of course, with the some news events still here and there, but nothing major, let me say it this way. So what happened with price today? Yesterday, the euro, basically dollar weakness jumped in the market. Now that dollar weakness was not so present and visible against the euro as much as the Aussie or New Zealand had. So we saw the Aussie USD and the New Zealand USD jump up a lot more, in fact, even the pound dollar a lot more. So the euro was capitalizing the least on the dollar weakness, and that's why also euro crosses went down, like the euro odd, like the euro New Zealand. You saw pretty big movements on that. So whatever the reason was for the fact that price went up, I guess that in this case, FOMC, the fact that the quantitative easing decrease maybe was not as fast as expected. I'm not sure. I didn't check it as yet. Unfortunately, let me take a look quickly here. But in any case, most important for us is the price movement, and we can see that Eurodollar, for instance, is a daily R1. Let's take a look at, I'll leave the pivot points on, as always, just to keep an eye on that. For wave trading, moving averages, by the way, are very useful to get an idea of, and the awesome oscillator. So for those that are maybe new to this webinar, let me open the chat box in the meantime. Adrian is saying is that quantitative easing was expected. Yeah, CNBC is saying damaging deflation threatens Eurozone, so that's probably one of the reasons why the euro didn't get that bounce as much as the Aussie, for instance, and in New Zealand. New Zealand, of course, on top of that, had increased their interest rate by a quarter to 3.25 last week as well. I see the headlines here, Fed tapers 10 billion more. Economic outlook, however, was cut, so it seems like a mixed message there. Anyhow, now I lost my train of thought. But yeah, if you're new in here, basically you can use moving averages and the AO to decipher what the wave analysis and wave count is more thoroughly. How you do that exactly is something I guess we'll do just in practical examples. The fib numbers you don't necessarily have to use in conjunction with waves, but logically speaking, if you use waves, it's very useful to use fibs. If you use fibs, you don't necessarily need to use waves. However, logically speaking, if you do use fibs, you want to use the most optimal swing high and swing low. Knowing which the best swing high, swing low is quite useful to actually use waves. I know that not all fib traders actually do that, but there is a bit of an advantage if you are a fib trader to know a bit about wave analysis. So I know that wave analysis sometimes can be annoying for some traders, but it has certain advantages. I would recommend wave analysis in the sense that you use it more as a loose guideline. I wouldn't take it, let me say it this way, I don't want to knock wave analysis down as far as a theory, but in practical sense, I wouldn't be too concerned about it. I wouldn't put too heavy emphasis on it. I would use it as a tool that you have an idea what's going on, but I wouldn't go into the very, very fine details of what is that, what is this. It's more like, to get a general flow, an idea of the flow, basically, if anything else. That's what I would recommend at least. But if you're new in here, let me know, so then I have more idea, to provide a bit more details regarding fibs and waves. Otherwise, probably most of you have been already here in many of the fib and wave webinars, so then I would not go through many of the things that we've already discussed in the past, right? So regarding the Eurodollar, let me get rid of this template quickly. Let's take a look here. We have the daily chart indeed getting the bounce as we were already looking for, basically the retracement of this big pin bar, the engulfing pin bar. The fact that price came so close to the bottom was already, of course, a potential for a bounce, such a strong 135 level. Finally, we got the bounce. It did take quite long before price made the turn, but as expected, that did happen. If you took a long, you needed a lot of patience to stay in that one, but you are finally getting rewarded if you did have that patience. At the moment, price is continuing its break to the upside after a consolidation here. We had a FOMC spike, consolidation, and now seeing follow-through, an early follow-through, in fact. Let's take a look at the 50-minute chart. We're breaking two new highs. So we have to take a look at the fibs on the hourly to see how much space there is left. If we put a fib on the very first swing, swing high, swing low, which would be from after this double bottom here, once again, that double bottom happened close to that daily engulfing twin. And if we put a Fibonacci retracement level from the very bottom of that swing to the very top of that swing, we can see actually the price is pushing through the minus 272. Let me just adjust it just in case that price is actually using this swing high, swing low. Yeah, that seems to be a bit more accurate. So sometimes you can see you need to be cautious. Not always the first swing that you use is the correct one. We can see price stopping at the 61.8 fib, hitting the minus 272 target, making again a retracement, and now moving towards the minus 618 target. So the target is pretty close by. From a fib point of view, that could be a stalling spot for the moment at 136.20. If we get a consolidation and a pullback from there, though, we could look for a potential bounce at the next fib, which could be the 38.2 fib. So we can see price maybe retrace off of that 136.20 level, which is the minus 618 target, down to, for instance, the 38.2, and then bounce again. That's something that seems the most likely and is the path of least resistance at current time, I would say. Now, price doesn't have to stop exactly at 136.20. It could be a pip lower or 5 pips higher, obviously. But roughly speaking, we are close to the target. In some cases, not as often, but sometimes we get even a shallower retracement, or even hardly any consolidation before you do continue. That sometimes happens. If the impulse is very strong, price could go to the next target, which is the -1,000. So let's discuss both variations. I wanted to say. The 38.2 fib, I think if price does make a hook back to the 136 or the 135.88, then those are good bouncing spots. Looking for candlestick patterns there makes a lot of sense as a bouncing spot. I wouldn't use entry orders with those particular levels just because the risk is on the high side. Would rather wait for confirmation when price gets to those levels. The other scenario would be a breakout, an immediate breakout, as I said, but basically that would not be too interesting for me, just because of the fact that it's too little profit, basically too little potential profit is remaining compared to the risk that has to be taken in regard to the stop loss size. So if you look at intraday potential, then the -1,000 is possible in the -272, and you can see prices trying to push through actually as we speak. It's just that if you jump in right here, you're chasing the market instead of planning for a trade, and those things never end up too well. So yeah, if you took the trade from the breakout level, then that's fine. You can trail stop it and try to catch as much profit as possible. But jumping in here is, first of all, not a fib trade, and well, we're looking at fib and wave trading, so that would not make sense. Could be a breakout trade, but as I said, the potential space, if you look at the expected ATR high of today, it's roughly close to that H5 and the fib targets. So basically, this is moving towards those targets as we speak. So either it hooks back and pulls back, and we get a bounce off of these fib levels that I mentioned. I know this is a bit crowded chart. Let me get rid of some of these things because it's just overcrowded, and I'm afraid you won't be able to see it. Either price indeed makes that pullback and bounces, or it just hits the target, and if anything, a reversal trade could be potential possible from higher levels. Something to be aware of, by the way, is also this daily and weekly pivot confluence. It's also the ATR expected low plus the L3 Camarilla pivot point. A lot of confluence at this level too. So about 135.80, 136, a lot of confluence for potential bounces. But let's see, prices looking pretty stubborn in its move up, so maybe it will not pause here, and then there's nothing we can do about that. 4-hour chart, you can see how much price is eating up that real estate and potential today. But you can see why you want to be careful today, because look, today already, so early in the day, in fact, European session only open 1 hour, has already eaten up so much of the upside space, because look at this. This is where resistance is. This is where the daily tops are. And we're getting closer and closer to that. Plus, we have a weekly R1 pivot point as well. It's just that the more it moves up, the smaller the space gets, the less tradable it becomes. And if anything, only reversal trades, potential reversal trades to the downside make sense. But with those, I would also recommend to wait for a bit of confirmation, like some price action wicks, for instance. So that's on the Eurodollar. I think that covers all the angles at the moment. Adrian, by the way, mentioned that FOMC mentioned something about the interest rates which will increase slower than expected. Yeah, that can certainly put this dollar weakness into play indeed. We saw that even more so against the pound, which had a big spike up. I wasn't a big fan of the pound. I did say yesterday that if it gets back to the 169 level, that would be a great longing area. Let's see what price managed to reach. It got back to 169.60 169.18. So it kind of missed, unfortunately, the 169-ish, 169.05 zone there that I had in mind, unfortunately, by something like 12 to 17 pips. That's a pity because it was a good bouncing spot. There was a lot of confluence. Yesterday we used the fib as well and said, well, the 38.2 fib would be a great spot because there was a lot of confluence. There was a daily, I think, but for sure a weekly pivot, plus the L5 at that point. Well, there was some confluence. Of course, the current chart looks different, so I don't recall exactly what confluence we had, but there was a lot of confluence in any case. One of those things was the 38.2 fib at 169.05. Price bounced just a tad higher than that, which is a shame because it was really a decent level. And we can see that indeed a lot of momentum came into that market when price did make that retracement lower. I forgot who, but someone told me about the fact that many people were short. However, I was skeptical about that because of the momentum up and the fact that this was looking corrective. There was something to say for that idea in the sense that we are very close to resistances when looking at the daily and the weekly chart. And in that regard, that idea has validity. It just was that if you look at the lower time frames, there was a lot of momentum riding behind this storm up. And in that regard, I was really only looking for more bearishness. If we could break the 50, then things started to look a bit more bearish. That's what we discussed yesterday, so that seems to be holding true. We did get a move up, consolidation, and again a move up like the Eurodollar and trying to push through this top. At the moment, though, there's nothing to do for myself. I'm not sure how you look at it, but the fib trade was here. There's no fib trade here. If anything, there's a breakout trade. How appealing is that breakout trade to the upside? That is not too appealing to me because we are indeed close to higher resistance levels. If you look at the monthly chart, which we don't do often, but in this case, it makes sense because the last time we were above 170 was last month, but I mean before that was actually all the way back to, dating back to January 2009, and before that back to fall 2008. So you can see that obviously these are levels that we haven't seen in a very long while, which makes the whole structure vulnerable to potential pauses, potential dips, potential struggles when price is trying to break through to the upside, and price ultimately could fail if it reaches these levels. And it had a struggle last month, didn't it, when price reached the 170 and totally turned for downside. So we are trying to push through that again, which is fine. We might succeed this time. It's just that it of course will still have its struggle just because it's such a big level. At what point would I maybe still be interested? Because we do have a large momentum. Once again, maybe if we pull back to the daily pivot point, that would be more or less a potential fib trade like this one was as well. Let's take a look at the daily if that makes sense. Probably will not happen though, but we had engulfing twins yesterday. Basically the idea would be a retrace of those engulfing twins. Could still be the bouncing spot. However, today has just continued higher without giving a substantial retrace, so that might not be too likely. Let's take a look at it from a 4-hour angle. Hourly angle, got a bullish candle. We are at the H3. 170.40 is a big resistance. Obviously, taking a breakout here, as I said, it's just very, very tight space before you bump into that major top. Therefore, wouldn't be too keen on that. The only thing I could imagine is a pullback. That is the only thing that could make sense in my opinion. But how far will a potential pullback go before it makes sense? Obviously, the daily would be interesting. But we'll get there is the question. We could also go back to the 170 level, which is the round number, and these tops basically hook back to broken resistance becoming support. That could happen around 170, about 10 pips away from here. However, It's not something I would put a pending order at. I would rather wait for price and see how it responds when it gets there and see if we get some confirmation on the 15 chart to see if we see candlestick wick, for instance, or engulfing twins at that level. That might be worth it. But in general, I would like to take a look at other pairs, see if they are maybe positioned a bit more spaciously, because the zone, the entire area is getting a bit tight. It's claustrophobic almost in a way with such a big level close by. So, oh yeah, we got the, thanks Adrian, we got the pound retail sales as well. So we should wait for that certainly. That is about 1 hour, 24 minutes from now. And that certainly can have its impact, definitely. Yesterday we had pound news as well, didn't we? And we had an up, down, and flatness throughout the day until we had FOMC, and then we had a down, up. So it was basically the news events that were ruling the day's price action. But we did say that the breakout to the upside, be careful, because wait for the pullback rather. That never happened, or the 38.2. So despite the fundamentals, we did get some reading there. But yeah, this one has the same effect indeed, Adrian. I agree. The news event could let it spike both ways. So we'll have to wait and see. At the moment, by the way, the hourly AO is still building to the upside. Now, I talked about the AO at the beginning of the webinar and said how you can use it for wave analysis. Basically, what you want to do is wait for the AO to get back to the zero line, and then you know that the particular wave is or swing is most likely one wave or one leg, right? All wave analysis is basically piecing together swing highs and swing lows, right? So if you have the AO here back making an upside and it goes back to the zero line, then this is kind of like one leg. Let's take a look at the Eurodollar. This from here to here is one leg. Why? Because price started below the zero line, went above, and back to the zero line. So basically, when it goes back to the zero line, you know that this is one piece, and that this is one piece, and that this so far is one piece. So all wave analysis is doing is saying, okay, this is one swing, this is another swing, this swing looks impulsive, this looks correction, so this could be a wave one and this could be a wave two, right? It's just gluing together all these swings and labeling those swings, and sometimes those labels could be wrong, but you know, in general, it's not as sophisticated or fancy as some traders might think it is. It's basically like jigsaw puzzle, right? You're taking one piece and seeing if the next piece fits within the next puzzle piece, and you're trying to match these puzzle pieces so that you get some good-looking puzzle, right, in total. Well, wave analysis is nothing more or less than that, roughly. It's just piecing all these swing highs and lows together. So you can use that AO and using that momentum and then back to the zero line to get a reading of that. If you need more clarification on that, let me know, okay? But basically, one more example. Here, for instance, price crosses below the zero line, price crosses back above the zero line here, which means that from here to the bottom, or that's, yeah, that is one swing. Alrighty. Dollar yen is breaking to the downside, actually. So got good momentum. Maybe a bit surprising we didn't get a bounce here, but the momentum pushing it lower and lower, and we got all the pivots above us now. So from a Fib perspective, I would say it's a bit difficult, this pair, because it's so big of a consolidation that when we get a consolidation like that, Fibs lose their value in general. However, within lower time frames, you could still find swings like that, when you find swings like that, fibs still make some sense, but obviously on the daily chart, there's a big consolidation, so higher fibs would for the moment not really have much value. We can see that price stopped at the 61.8 for the moment, and because of the fact that we broke through the support trend line, you can see the fact that price is probably going to push through to the target, the minus 272 target. So a breakout, unfortunately the fib trading was not doable, I would say, in this sense, to take the 61.8, unless you're a counter trend trader there maybe. But in any case, if you missed the fib, no problem. Price is breaking through to the downside, so there could be a good breakout trade back down below here. Not that I'm a big fan of the dollar yen in general, but you can see prices making that momentum down. I hook back to the monthly pivot, for instance, and I hook back to that broken trend line for a move down is something that makes sense. We could get that bounce right here. We're at the daily S1 pivot point, so that could make sense. Now, considering the fact that today is a wave analysis as well as fibs, I would like to just quickly show you the wave analysis of today, if I can find it. This is yesterday's. I clicked the wrong one by accident. There it is. This is the wave analysis. You'll find that every day on our website here at Emerald Markets. To go to Analytics, then Wave Analysis, and you will see the most current one at the top. And this is today's. So take a look if you like. You can see all the waves count on there for the Eurodollar, pound dollar, dollar yen at least. And at the moment, the Eurodollar wave B has taken a long time, but it's finally indeed shaping up to be that. I've had long discount, or even a 1-2 I had. Price hasn't confirmed that for a very long time, especially if you consider that it's been bouncing at this bottom for about 5 days. But finally, we're getting that upside momentum as my wave analysis was roughly expecting. Once again, it's not a science. It's more of an art, in fact, just to get a feel for the flow. So you could, it's always easy to make a change in this. It's, in my opinion, not the goal to be absolutely perfect in it, but just to get a sense of what price could do at certain spots and certain support and resistance spots, basically. And the wave B indeed bouncing off this bottom, and now it looks like we're going to go up for wave C, I would say, probably roughly to the 100 level here, or the 161.8 blue targets confluence there would be the first targets that we could think of probably. On the lower chart, that was the 240. This is the 60-minute chart. You can see I was thinking about breakouts to the upside. You can see these green arrows, but that's what price is doing at the moment indeed. Following these arrows, roughly speaking at least. And, well, not too sure about this one, but was thinking about wave 1-1-2, 2 1-2s basically, indicating the start of some upside momentum. Let's see how much follow-through we get indeed. The pound dollar is looking to me more and more like a 1, 2, 3, 4, 5, but I still have the corrective variation on it as well. The purple line is indicating indeed the consolidation for which is typical for wave 4, and yeah, it's a typical 5 wave, which, or at least so far, it's looking like a typical 5 wave. Let's see the AO as well. You can see clearly low for the wave 1. Higher for the wave 3, and the wave 5 would have divergence, which is what you typically see for that pattern. So it is looking like that at the moment. Here you see that on the hourly chart, the wave 4, as expected, at bouncing at that level. The dollar yen is a headache, very simply put, because it's such a big consolidation that you have a lot of corrective wave counts, a lot of ABCs, a lot of WXYs. So far, those wave counts have not done too badly, which is good, despite the fact that corrections are more difficult. At the moment, I have it labeled as a WXY green to kind of complete a lot of corrections with a WXY within green, but the black X is not really materializing so far. Why? Because price here is breaking through magenta. Now, that target for X could be, for instance, 101.60, which is the 100 level. So let's go back now. That's all the wave counts I have. So 101.60, it's getting closer. It's at 101.74 at the moment. So 101.60 would be basically the daily S2 pivot point. Let's see if that is the bouncing spot indeed. That's the wave at the moment. Let's continue. Take a look at the AUD USD. The AUD USD and the New Zealand USD both had a tremendous upside. So it makes the current structure, just like the pound, similar in the regard that we have already broken out, unfortunately. So that leaves us either a second breakout potential or waiting for the pullback. So we're seeing this same analysis across the board, in fact. So sorry, we can't do anything about that, I guess, right? But yeah, that makes it basically gives us, provides us the necessity to be a bit patient, in my opinion. Yeah, it's all the same scenarios where the 50-minute chart has moved away from moving averages and we have broken out to the upside, but therefore we have that upside momentum, but not worth trading right here, right now. Pullbacks. Pullback time. We can put a fib on this first swing high, swing low. Price barely made it to the 23.6. If we take it from the very bottom to this top, price hardly made it to 23.6 before it already bounced off the weekly too. And we got very close to the minus 272 target, as you can see, about 4.5 pips. That could already be respect for that fib target. So we have two scenarios. Either price is going to bounce off this new fib from this bottom to this top, and we can expect roughly, I would say, normally speaking, of course these are just statistical stats, basically nothing is 100%. There's a decent chance we will bounce off the 78, a deep fib like the 78 or 886 fib. I wouldn't expect a very shallow fib here. The other scenario is that price will actually go to the 38.2 in the daily pivot or bounce again off the weekly in 23.6. So all these three levels could be bouncing spots to the upside. Upside seems quite a decent chance, as we can see. Is it a guarantee? No, not even that. But we obviously, if you look at, now there's too much information here. One second. Obviously, if you look at the daily chart, we had daily engulfing twins. We have bullish weekly candles that even broke this resistance. So from the longer term perspective, no matter how you look at it almost, it's looking bullish. Now the question is, what would be a good bouncing spot for a upside trade? And that's not here, in my opinion, but could be indeed a bit lower. So I would rather wait for price to get lower and wait for some confirmation that price is using those levels that I expect. Kiwi dollar finally got the upside follow through after last week's interest rate. Took a while, but finally happened. And last week's momentum, you can see what kind of momentum it had here. Look at this big AO reading. And we know that if it gets back to the zero line after that, there's a good chance of continuation. Price already reached the zero line here, so it took longer than needed before we got the follow through to the upside, but eventually we did get that follow through, and we had just another engulfing twin here, in fact. So we had a big FOMC upside momentum. Today is not the same follow through as yet as the others. We didn't break the top compared to the odd USD, for instance. But yeah, the same story does apply in the sense that if price does get back to the HER low or the daily S1, that could be a bouncing spot. Price is actually already bouncing off the daily pivot, which itself already could be enough retracement, right here. So waiting for, this could be a hook back, but considering the fact that the New Zealand, relatively to the others, is not as bullish, I would be cautious of assuming price will continue again off of that daily pivot. That could happen, but it's not something that I would say is worth a pending order. Let's take a look at the targets using this fib. Once again, the fib would only be used on swing highs, swing lows that have happened prior to current price, because we're actually breaking towards those targets. So minus 272 target is at 87.60. That would be a bigger target for the moment, at least on this 4-hour chart, where price indeed could stall when it gets there. Not only is there a minus 272 target, but we can see a bigger top, about 87.78. So there's another reason, a confluence for price to stop there at that resistance. So if a long would be taken, then I would be cautious of 87.60 zone, where we have also on top of that the ATR, expected high, plus a weekly R1 plus that target. So if you do manage to get along, then I would be looking for that target. But at the moment, I'm still on the sidelines before I would attempt that. Let's see if anything else is maybe interesting to trade a bit sooner. Dollar CAD is breaking to the downside, in fact. Dollar weakness sending this the loonie to the downside here. And we had a break of this trend line, and then both trend lines, in fact. Actually, we had a break up first and then a breakdown. Crazy, but can happen. I don't see, however, at the moment, let me take a look again. Don't see something particularly of interest, in fact, on this dollar CAD at the moment. So let's continue. I would say the euro weakness against the odd in New Zealand are pairs that are looking interesting to me at the moment, because the Aussie, the euro odd and euro New Zealand just made good falls yesterday, and although they could make retracements easily, I would be pretty interested in seeing if price could make a follow through one more time to the downside if it does go back to some good resistance. If you look at the daily chart, we had a harami, for instance, on the euro odd, which is a bearish signal. We had a lot of momentum to the downside on this daily chart. Look at this. Big momentum here. This could be one of those corrections like this for the downside. So a harami like yesterday's candle could signal that. And we have good momentum on this daily chart. Look at the moving averages here. Pretty big gap. So this could be the retracement that sends this euro odd further down. I would be willing I would be interested in looking for trades on this one. I think it's an interesting setup. The 4-hour bearish candle is certainly huge. It broke this correction easily, didn't it? Now we know that price makes a lot of ups and downs consistently on all time frames. It retraces all kind of moves, candles, swings. So this bearish candle could easily get retraced before we find downside. That I find quite interesting. So one of the things we can do is take a fib from the top to the bottom and say, okay, where could be a logical stalling spot for that downside? And we know that any of these fibs could be that, in fact. In this case, I don't really have a favorite for any of these. But the 38.2 would be relatively shallow fib. I think that 50 or higher would be a bit more desirable, but you never know. I would rather probably wait for either a candlestick pattern at the 50 or 61.8 or even the 78.6 if price gets that high. So let's see if it gets there. Obviously, the hourly has good bearish momentum. So yeah, I would be waiting for a hook back here for more downside. I think that this tickles my my curiosity. It could even be worth an entry order. Doesn't have to be though. Could be worth it. However, waiting for confirmation never hurts anyone, I think. So that would be valid for this pair as well. I'm thinking if I wanted to add anything, but at the moment, nothing comes to mind. You see, what happened is that we got a retracement of last week's bearish candle. So that could be all the upside we could see, really. Euro New Zealand is the same. You can find it. There it is. But its upside is having a bit more muscle so far. You can see it's pushing up a bit higher there. Same interest though. I'm kind of curious if we can see a follow through to the downside, but price is pushing higher and higher. So one of the things we could wait for is indeed a wick, for instance, a candlestick pattern at 88.6 or 78.6 Fibonacci retracements, or even take a direct order at the 88.6. Why? Well, one of the things that I like about it is the fact that it's just a very tight risk compared to a pretty big reward. So that's one of the advantages. The other scenario would be if price doesn't get that high, or if it does get that high, but we see indeed a bounce off that, is that price crossing back below basically the 13 EMA that we have here on the chart. And that would be more of a breakout scenario though, right? If price breaks below it, and we see moving averages turn again, and we see that happening. But it's obviously making a sturdy retracement. Yesterday was a very big bearish day after shooting star. Today seems like a retracement day of yesterday. Yeah, so this one I would say is very interesting to keep an eye on, either for the pullback here to a deep fib or indeed the breakout to lower levels. Alrighty, let's move over, and if you have any questions, let me know. I got a question from my CA. Let's take a look at that. First of all, before I do that, let me quickly review Pound New Zealand. Same story, also got some downside in fact. So there's a lot of confluence here, by the way, around 159, what is it, 80? Yeah, that could be an interesting shorting area, but we'll just quickly scan the others before we dive into that question. So let's take a look at the gold, XAUUSD. Is it possible to wave trade on gold? Yeah, you can do counts on gold too, absolutely. There are many traders who do that, so there's no problem. You know, you could, as I said, you can use these swings to have an idea. What you want to do, first of all, when you see a swing, is label it impulsive or corrective. And then you want to check the previous swing if that was impulsive or corrective. And you might want to do that for a few of those swings to get a picture of the sequence. Then you might want to take a look at the higher and lower time frames to put the puzzle together. For instance, here we see an impulsive downswing. And we see maybe even an impulsive upswing, right? So this could be a wave A or 1, and this could be wave 2 or B, followed by another 1 or 2, and this is also impulsive, so this could be a wave 3, but we see actually the price is crossing back into the territory of wave 1, so it shouldn't be a wave 1, 2, 3. In fact, this cannot be a wave 4 anymore. So this is how you can do the puzzling, step by step. And this is now looking more, if anything, like either a wave 1, 2, 1, 2, 1, 2, which is a lot of 1, 2s. It's possible, but maybe not the most likely scenario. Or this could be indeed a corrective wave A, for instance, followed by wave B of a wave C, for instance. And ABC could be completed here. Let's put a fib on it. And you can see that price went to the minus 272 target. Let me get rid of this fib. And bounced up that target. So another reason that could confirm the fact that the wave has ended there. But yeah, many people do wave counts there. And you can see, once again, knowing what the correct swing is important, because that allows you to do the analysis better. Because if you know that this is one swing, well, this is the kind of logical example almost, but the AO will help with that as well. Because here it went back to the zero line. So you know that this is more or less also one swing. Right? So you can use that to the advantage too. That's looking like a, what is it, the contracting triangle maybe? So that would be a swing on its own as well. Just like this now is looking like a swing too. So what do you have? You got 3 swings here basically. Impulse down, corrective sideways, impulse down. On the weekly chart though, it's looking like price is going back to support, so we could see a bounce as we are seeing it on gold at the moment. The only thing, I haven't looked at gold in a while, but considering that bullish momentum, the only thing that would seem interesting at the moment are potential bounces at these pivots for upside. Target could be the 1296 minus 272 target. No problem, Richard. I'm not sure which part, but I was talking about how you can use the AO to have an idea about the wave or swing high, swing low, basically, first of all, because all waves are swing high, swing lows. So anyone who's using swing high, swing lows, it's a small step to using waves after that. Now you can identify swing high, swing lows by looking at tops and bottoms, but not all tops and bottoms would be as important. For instance, here we had a top, but price still made a small retracement and continued. Would I consider this the swing high? Not at least on this daily chart, no. So the swing high and swing low are tops and bottoms, but not all tops and bottoms are swing high, swing lows. Which ones are more important? Well, we can sometimes see it visually. Obviously, this is a very major bottom, and this is a very major top. And most of the price action in between is moving in one direction. So we can consider that as one swing high, swing low. Another way of confirming that is using the AO by saying, okay, where did the AO cross the zero line, and where does it recross back? And that swing high, swing low that we already had in mind is being confirmed by indeed the AO down below. That looks like, the blue arrow looks like one swing high, swing low. On the daily chart, the retracement here seems like three waves, 1, 2, 3. And that corrective, that looks like a correction. At the moment, it looks like a correction. Why? Because this impulse actually, oh, one second. Is a bigger swing than the current downside. So the swing down also happened in three waves, whereas the swing up in one. So it looks like this is up is more impulsive, and this is more of a corrective, impulsive correction. The downside did have impulsive moves with correction in between, but overall it looks like an impulsive correction, at the moment at least. If you put a fib on the entire upside here, you see the price roughly, I just didn't get there. In fact, this one is not a good example. That can happen. But price stopped at the target, not so much at the fib retracement. And normally they are aligned, and normally they're quite synchronized. But in this case, not so much. In this case, price actually bounced off that target. So that's how you can use that AO. Why? One more time, basically, you can use the AO like this is one swing because the AO crossed the zero line and recrossed. So that would be one swing. I promised someone, unfortunately I forgot who, to ask Nenad about a question regarding MT4 Supreme Edition. Nenad answered me yesterday. Let's take a look. That he will be presenting new features of Supreme MT4 on Friday. Basically, those are for those that do not know, the Supreme MT4 are expert advisors which raise the functionality of MT4. So hopefully that person is Vigantes. Thank you. Yeah. So that's the answer. I'm not sure why Friday exactly, but I guess you will know why, hopefully. Let's take a look. Okay, it's taking a bit slow somehow. I don't know why, but anyhow, so back to our fib and wave trading. Fib trading is good to use Confluence anyhow, because I would think that fibs are better to use with a Confluence. They're great, but price sometimes makes breakthroughs through fib levels, so it's just good to use extra Confluence because sometimes if price is doing stuff like this, a lot of ups and downs, within a range, fibs will not work, for instance, that well, or not provide that much guidance. So we want to be careful of that. Here, for instance, you can see 50 fib down to minus 272 target, and price now bouncing off the 61.8. So let me show you to that. Right here, 50 down to minus 272, up to minus 618. That pattern you see a lot in the Forex market. So the next bearish target could be minus 618. There could be a lot of bearish momentum coming in. Also on the pound odd, not only the euro odd. We specifically talked about the euro odd and euro New Zealand, but the pound odd and pound New Zealand will have roughly the same bearishness. It's just the fact that euro is a bit weaker than the pound at the moment. But if we look at the 50-minute chart, let's take a look here. 50 fib down to the minus 618 target, so we can move that fib again from retracement to target. And we had a very shallow fib here, very, very shallow. Close to that minus 272 target. So what we could see is a bounce off that target and then a follow through. So waiting for some potential pullback trade there might be interesting, just like the euro odd as we discussed earlier. Euro odd is about to break. Would the break be interesting? Let's take a look. Yeah, it might not even get that high. It might not retrace that high. It doesn't look like it will, in fact. We had some wicks half an hour ago here, but that didn't provide any bounce, so we are now breaking through that. Yeah, that looks like, let me check again though. Looks like a decent breakout. There's enough space to the downside, I think, at least, to take that one. Because the S2 is here, even the S1 is pretty far, even the L3 is pretty far. There's not major obstacles that I would say are around the corner. So I like this. This is looking like a good breakout. It's not a fib trade, but it looks like a good breakout trade to me. And it'll be interesting to see 2 minutes from now how this candle closes. If it closes near the low, it looks like a good breakout. If it has a big wick, then I would still be a bit cautious still, because we do see wicks here. So I wouldn't jump in right now. These big wicks are something we still have to be a bit cautious of. Could easily turn into a third wick. Let's see, the stop loss size at the moment is a bit on the bigger side indeed. It's about 30 pips. But the space is there too. But yeah, I would still want to see this 50-minute candle close bearishly. Preferably, as you said, because the stop loss is on the bigger side, maybe even wait for a retracement of this 15-minute candle if it does close bearish to reduce that risk. That would probably make the R2Rs better. If this turns into a wick, then I would like to see, basically I would like to see price, probably what would happen was price will make consolidation or retrace higher. If it consolidates, I would like to see a close again below the low of a candle, the highest low of the consolidation. I know that sounds a bit confusing. What you could see, for instance, is a candle like that, a candle like that, and the consolidation, candle like that, candle like that. When you have a close that is below this consolidation, that could be then the signal for follow through. So what did we get? We got a candle close that was in the middle. It's not extremely bearish, it's not extremely weak either, which is not really giving us a good clue. It's not a decisive close near the low. I would rather wait for a retracement because of that. These wicks are definitely big, but we got momentum follow through here. two things. One thing could be either a breakout down below this candle low, that's one thing, or wait for a candle to retrace, this candle to retrace back to the weekly. That could be possible. Or just wait and see first one or two more candles, because just see how these two candles line up, and if we get a new close below the candle low, somewhere 2-3 candles away from now, then we might get the follow through. Now this is the euro odd indeed, not the pound odd. Is there divergence? Not as yet, because we had just a strong follow through yesterday. So we don't have a second bottom yet. Even if price starts to break below this bottom, then the thing is that we don't know how far it could go. This could start riding on a big downside momentum, and this could start falling. However, if this falls and then starts to climb up again, like this, and starts to climb up, we have 3 green bars on the AO, then there is indeed single divergence present. The first glimpse of it. Until then, though, we don't have it as yet. But at that point we would, and then, well, then we could get a bit of pullback because of that. But yeah, single is still quite little compared to what sometimes could happen on a 15. So, oh, you're looking at the top. Sorry. Yeah, there was divergence indeed between those tops. Yes, definitely. Yeah, I was looking for shorts on the euro. It just didn't get high enough. I was looking for it. Let me take a look at the hourly. Yeah, I was looking for a tad higher at that point. It just didn't get that high. It was probably about 50-ish. Wasn't all too far away from it, but I was in the Euro New Zealand short already let me show you from this shooting star, actually within the shooting star. So yeah, but the euro just got missed. Anyhow, yeah, the pound odd is moving down too, by the way. Yeah. But I think we discussed it and said it's close to the -272 target, so therefore rather wait for a bit of a bounce, which we still need to get. So yeah, the euro odd in that regard looks maybe a tad better, but the pound odd would be interesting too. Although I'd rather wait for a bit of a retracement still. So I'm still in a waiting mode. I don't have any pending orders on this one, but it's definitely going to attract my attention for today. At the moment, it doesn't seem likely that we'll get that bigger bounce, as I said, and we'll have to see how much consolidation price makes here. If it does make 2 or 3 candles and then start to close below the low, I would think that's a good spot for downside. But we might not get that, because we might indeed continue right away here. However, that is something I wouldn't do, as I said, right now, right here, because of these wicks. And the close that wasn't totally bearish. So that's why I'd rather wait 2-3 candles. The others, if we do push through, then I would like to see a break below this low. So it's either or. Either 2-3 candles and we break below the low, we close below the low, something like this, in my opinion. Oh. 1, 2, 3 candles, and we close below the low, then we should see follow through. Or we indeed break immediately below this low, and then there's that good chance of a breakout. Either way, if you want to get out quickly and not live through too much retracement because of maybe, for instance, potential divergence, then what you can do is use for instance, the 2 and the 4 EMA typical, and wait for the 2 to cross back over the 4, wait for the candle close to be above the 2, and that's where you could exit quickly. Now, I'm not sure how I will be able to monitor this trade myself, because I will have to actually pop out this morning, which is annoying, so I probably will have to skip this one if it does occur. I have to do some bureaucratic things, unfortunately, this morning, but I'll be trading this afternoon again, though. But doesn't look like I'll have time to monitor this one. But I always hate those bureaucratic things, but what can you do? But in any case, thanks for joining us today. We'll be back tonight. We'll have to cut this one a bit shorter than usual because of that. So wish you good trading today. And we have the webinar, as always, tonight, which is about mobile trading, by the way, if you want to take a look. Education, webinars, and you'll find that here at 19th. No, yeah, Pro Living Lab. Next week, of course, that will be the last webinar of this week, but next week we'll have the same lineup. As always, Nanette with his webinars in the evening and mine in the mornings. So hope to see you then, and hope to see you tonight, in fact, and talk to you soon. Cheers.